Yeah, we're absolutely still in a bull market. The bull market's intact from a technical standpoint, as long as it holds. I guess the number would be what, 2,800. That would be a 20% retracement, which would be a bear market, which would break the bull market. I think all eyes right now should be on silver. There's about 250 million ounces outstanding for the July expiration, with only 3 days left. And 250 million ounces, the world only produces 850 million ounces total production for the year. So you're looking at what, 30% of global production may be standing for delivery 3 days from now. Well, if you leave the chart where it is right there, that is almost a perfect inverted head and shoulders, which tells you, if you look at the breakout itself, we actually got down to, I think, about 35.10, 35.20 this morning. So, that's a probe of the breakout level. We may, it may take a little bit of time to chop and hold this 35 level before it goes higher. And like I said, 3 days from now, that could be a huge fundamental event where you've got, like I said, 250 million ounces could stand for delivery. There's no 250 million ounces anywhere in the world to deliver. I've said all along that I thought silver would be the detonator to gold, and gold will literally destroy all derivatives. Once there's a failure to deliver, all derivatives are going to fail, because everything runs on confidence, and it would show that, you've got a failed contract. What's the value of a contract that cannot perform? The answer is zero. So what you're saying there is paper's worth zero, and thus what is the real thing worth? The answer is there's no telling what the number is going to be, but it's going to be, when all is said and done, many multiples of where pricing is right now. Yeah, there's no issue for institutional entities as far as storage is concerned. They can find the storage space. And you're speaking right now of the investment demand. Mm-hmm. And silver is different than gold. Gold is basically all investment or monetary demand. Silver's got so many different uses. Silver's got medicinal uses. It has industrial uses. It has technological uses. Every time you see a Tomahawk missile launched, there goes a monster box. There's over 500 ounces per Tomahawk missile. So silver, you've got to look at a little differently, because there's not just investment demand. That's not the primary demand. The primary demand for silver is, as I said, medicinal, technological, industrial, etc. Even if we just got back to, and you might want to put your cursor up to the 40 to 50 level.
Okay.
What that would do, if we got to 40 or we got to 50, what you're talking about is silver will outperform gold 2-to-1 as far as purchasing power. So what I'm getting at is the risk reward of owning silver right now is hilariously in your favor. Well, yeah, there's absolutely upside potential in the gold price. Just do the math on the amount of gold that the U.S. says they have versus the amount of debt outstanding. And when I say debt outstanding, I'm just talking about on-books debt. Mm-hmm. I'm not talking about Fannie Mae, Freddie Mac, Ginnie Mae, all the loan guarantees, Medicaid, Medicare, all the guarantees. You're over $200 trillion. But if you just use the 37 trillion divided by 8,400 tons, the number you're looking at, if we had to pay our debt off in gold, we would have to price gold at about $135,000 an ounce. So there's tremendous upside to gold, but there's, in my mind, at least double the upside in silver versus gold. So, this term was coined years ago, but silver is going to be gold on steroids. I mean, on any given morning, you could wake up and gold's up $100, $200, never to look back. Uh,
Mm.
I mean, if we woke up one morning and found out that a tanker or a couple tankers hit mines in the Strait of Hormuz, what's that going to do?
Right.
That will break confidence. And God forbid, should we wake up one morning and find out that a aircraft carrier got sunk.
Hmm.
I mean, that would be a disaster because in the past, the dollar has always been the safe haven for foreign monies. What happened? If something happens that breaks confidence and the dollar / treasuries are no longer viewed as the safe haven, you're looking at game over USA.
Yeah.
Because,
So
and Danny, the reason it's game over USA is, what are we hearing now? That the next 4 years, the debt is going to increase by 10 trillion. That's
yep.
that. I mean, that's a disaster. And what that means is we need to borrow 10 trillion just to keep the doors open, just because of the level that it started from. Silver was slightly I'm sorry, oil was slightly oversold, and gold is slightly overbought and deserves a break. I mean, to see a pullback to 3,000, 3,100, that should not raise any eyebrows whatsoever. I mean, it would just be a relaxing of that market and working the overbought off. So I just view it, the percentage moves, oil should go higher on a percentage basis just because it was not overbought to begin with. Yeah, and that's a new low today on the dollar. 97.30, 97.40. That is a new low on this whole move for the dollar. So the dollar has not gotten a bid. And if you look with that chart right there, you see that how many years is that? 1, 2,
3.
Almost 3 years. You can see the bottoms in that sequence. It bottom, we get a bounce, it bottoms, and we get a bounce. This time we've broken through that support, and it tells me, you've got downside to find another support level from here. In today's world, as I just mentioned, you wake up one morning to a disastrous fundamental event, and you could see the dollar quickly in the 80s. Well, you've got some foreign flow from a fear standpoint, but I think rather than looking at the noise right now in that market, I think it's important to understand that the last big event was the Federal Reserve cut once or twice or 3 times. They cut a full 1 percentage point. But if you make that chart go back further, you'll see that from where the Fed started cutting rates, interest rates on the 10-year Treasury or across the board really on the yield curve are up 1 full percentage point. So
Right.
the Fed cut rates 1% and market rates went up 1%. That suggests to me that the Federal Reserve is losing control of the yield curve. I think they'll try anything and everything. And
Why do you?
I think they understand that they've lost control. The problem with losing control is, and I mean, Trump has said it himself, he wants rates lower so that the amount of interest paid on the debt is lower.
Mm-hmm.
But what if Mother Nature actually does take charge and there all of a sudden is some risk premia to the yield and yields are a point, 2 points higher than they are now? How does the government keep the financial doors open if they
Yeah.
can't borrow? I don't think so. I think it's the cake is already baked and it's about to catch fire in the oven.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.